We are living in the data and tech age, and if you don't get with the times, you will get beat. That's the reality that we're in. I mean, we've seen it happen with bookstores and movie stores and retail stores. But with every change comes opportunity. So if you're wondering how you can capitalize on this shift, make sure you watch this video until the end. What's up, everybody? I am Jaspreet Singh from theminoritymindset.com and welcome to The Minority Mindset. The future is digital and technology is taking over the world. When this pandemic came and slapped us in the face, most businesses were forced to shut down and were on the verge of bankruptcy, while tech and data businesses thrived. Amazon saw their stock double from around $1,600 a share in March to over $3,300 a share in August, and Apple went from being a measly $1 trillion company in March to the first $2 trillion company in August. These companies that understood the shift made more money than ever during a pandemic in the middle of a recession. But it wasn't just the shareholders who benefited. If you worked for one of these digital companies, you had job security and you benefited because you got big bonuses because your company was thriving. In the meantime, companies like JCPenney, Chesapeake Energy, Hertz, and California Pizza Kitchen, who did not keep up with the times, filed for bankruptcy and had mass layoffs. Here's the thing, this shift towards digital and technology is not slowing down. It is the future, so you can either get with the times or get beat by it. And in this video, I'm going to be going over how you can get with the times and capitalize on this shift. So make sure you watch this video until the end. That way you don't miss any of these key details. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube's not going to share our YouTube videos with anybody else. Subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial news and education videos every single week. And hit that little notification bell too, because if you don't, then YouTube's not going to let you know when any of our new videos are released. In the year 2000, Amazon made something like $2.7 billion in revenue for the year. And during that same year, 2000, Walmart made $187 billion in revenue. Fast forward to the year 2020 and Amazon made $90 billion in just the second quarter of 2020 alone. That's $90 billion in April, May, and June, while Walmart made $134 billion in the second quarter of 2020. Both companies grew over the last couple of decades, but Amazon boomed because their focus from the get-go was technology and understanding data, while Walmart is now playing catch-up and doing everything they can to understand how this shift works. I mean, just look at how tech companies get valued compared to any other company in the world. If you make $1 million of profit and you are a tech company, your business will be worth $100 million. But if you make $1 million of profit and you're a restaurant, now your business might only be worth $20 million. Investors are now pricing in how a company is using technology in their business, in their valuations of a company, because investors want to invest in companies that understand data and that understand technology and that are using this because investors know that that is the future. And if you still don't believe me, take a look at this. Tesla is everyone's favorite car company, right? Unless you're from Detroit. But Tesla sells electric cars. However, they don't call themselves a car company. They call themselves a tech company. In 2019, Tesla made $25 billion in revenue selling their products, and they made a profit of $0. Actually, they lost about $860 million in 2019, but in 2020, Tesla is valued at around $380 billion. In 2019, during that same year, Ford made $143 billion, GM made $137 billion, and Chrysler made about $120 billion selling their stuff. Now, all three of these companies made way more money than Tesla. All three of these companies are profitable, but Tesla is valued more than Ford, GM, and Chrysler combined. At the time of me recording this video, Ford is valued at about $26 billion, GM is valued at about $40 billion, and Fiat Chrysler is valued at about $20 billion. Add all these up and you have a total valuation of all three of these companies combined of just less than $90 billion. But Tesla, who makes less money and sells less cars, is worth more than 4 times more than the big 3 automakers in America combined. You can hate it, you can love it, you can call it a bubble, which sure, it might be, but you cannot deny the fact that technology is the future, which is why I want you to learn how to capitalize on this shift. So now what do? How do you get your piece of this new technology future, especially if you're not a tech person and you don't understand data science? Well, you can use this as an opportunity to learn, because technology is all about blending data with business and the internet together. And this can be very lucrative for you. I mean, Business Insider did an article where they talked about some of the highest paid and growing jobs out there, and many of them revolved around data science and technology. And if you're thinking, but wait, I don't have a degree or know how to do any coding or programming or technology or data, well, you don't need to, because nowadays many of the big tech companies don't require any sort of special 4-year degree, and you can learn everything you want. These companies are looking for people with experience and who know how to think. And lucky for you, even if you have no idea of how to code or understand data science, you can learn everything you want literally on your fingertips thanks to our sponsor DataCamp, because they have broken all of this down for you in easy to digest, bite-sized courses. They have courses on almost everything related to data science. So if you wanted to learn how to code, they have courses that teach you Python. If you want to program, they have courses that will teach you SQL. Or if you just want to know how to analyze data on Excel or spreadsheet, they have courses on that too. And if all this sounds like gibberish for you, well, you can go in and you can just search which technology you want to learn. So let's say you want to learn how to code, or let's say you want to learn machine learning, or let's say you want to learn how to manage your money better. They will teach you how to create financial systems, like how to value your investments or just track your money better, and they have courses that will teach you how to do this. When you complete a course, you're gonna get a certificate, and you can do a couple things with the certificate. You can put it on the wall to remind yourself of how smart you are every day, or you can take the certificate and you can put it on your resume. That way you can land a new career, because many data science jobs are paying 6 figures, and DataCamp can give you the certificates and knowledge that you need to get that job. You don't gotta take my word for it. Try it out yourself. DataCamp is letting you get a taste of any of their courses for free. All you gotta do is go onto their website using our link in the description below, and then you can try out any one of their courses, because they are letting you see the first chapter of all the courses on their website for free. They have more than 300 courses on their website that you can go through. You can watch these courses whenever you want from anywhere in the world, and the best part is if you do want to learn more and get full access to their stuff, it costs only $25 a month. Compare that to your college education. Minority Mindset is a partner with DataCamp, so if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more or try out any of their courses for free, I got the link to where you can do that in the description below. Now, if you're not interested in changing your career path or starting your own business to take advantage of the digital shift, you're not out of options. You can use your money as a tool to buy a piece of these companies that are taking advantage of this digital shift. That way, as they make more money, so do you. Now, this doesn't mean you have to go out and invest in Facebook or Tesla or one of those companies with sky-high technology valuations. This means look for a company that is using data and technology in their business to grow and scale. When you invest in a company on the stock market, you become one of the owners of that company. So if you go out and you buy 1 share of Amazon, you become one of the owners of the Amazon company, and if Amazon goes out and makes a lot of money, so do you. Now again, before you just go out and start buying tech stocks, I need you to take a deep breath. The most successful investors are not the ones that get emotional and they buy stocks when they're sky high and then sell them when they're rock bottom. They're the ones who are patient, and then they come in and buy stocks when they're on a discount. Now, before I go over how to do analysis, let me just remind you that investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So make sure you always do your own due diligence and never blindly listen to a random guy on YouTube. One of the simplest kind of preliminary type of analysis that I like to do is I like to look at how much money a company is making by looking at their EBITDA and comparing that to their valuation. Again, you don't have to do this. There's a million ways to analyze a company. This is just one of the things that I like to look at. The EBITDA stands for earnings before interest, depreciation, taxes, and amortization, and this number gives you a good idea of how much money a company actually makes. I like looking at a company's EBITDA more than a company's revenue or their profits because those numbers can be misleading. I mean, revenues don't show you any of their expenses, and everybody has a different definition of profit. Like, is your profit after paying taxes? Is it after paying out dividends? And is it after showing depreciation on your taxes? If a company is on the stock market, all their financial information is public. So you literally can just go to Google and search a company's EBITDA or their financials, and that information will pop up over there. Then I like to compare how much money a company is making with their valuation, which is known as their market capitalization. If a company's EBITDA tells you that this company made $1 billion and its market cap is $5 billion, that means that this company is selling for 5 times EBITDA. Now, by itself, this information is pretty worthless. You want to compare this information with its competitors. Like, if this company's competitor is selling for 50 times EBITDA, that means that the company you're looking at might be on sale. That's when you want to start doing more research. Like, are the revenues growing? Are the profits growing? Are they innovating for the future? You do not want to make an investment decision based off of just one factor. But if you do your research and you don't get emotional, and now you do your analysis and you buy companies on sale and you hold them for the long term, you have a much better chance of winning. Is it guaranteed? No, of course not. Investing has risks. And if you don't like the idea of investing in the stock market, then look around you. Do you know of any entrepreneurs that are starting a business and trying to take advantage of this digital shift? If so, you can be an early stage investor in these companies and give them money in exchange for ownership in their company. Like I said before, this digital shift is not slowing down. And anytime you see a change like this happen, you can do one of 3 things. You can sit there and complain about it, you can do nothing and watch it happen, or you can be the one to capitalize it. That way you can come out of this shift a financial winner. I want you, as a minority mindset thinker, to do the 3rd option. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how you can grow a small stock market portfolio from $100 to $10,000, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.